Well, guys, thanks for being here. Appreciate you all in the room and stuff. I do have live chat open at the moment, so feel free to ask any questions as we go through. I am live, and I'm getting all the information as it comes through in real time. So all good. And any other questions you may have as well, I will be answering it in real time. My name's Sam Evans. I represent, and I'm one of the market specialists over at Pinnacle Institute, and we got about 40 minutes or so. I've got until quarter to the hour. It's just after 10 o'clock here on the East Coast, and I know many of you I've worked with before. I've been in these sessions before. You're familiar with myself, and more importantly, Sam Seiden. And if you are interested in spending a little bit more time with us, I've just got some dates here up on the screen for your consideration. Sam Seiden himself is doing a workshop tomorrow, 11 a.m. Eastern time. So we also have sessions on Saturday and following Wednesday as well. And I'll give you those numbers and those sessions before we finish up today as well. But today we're going to be doing a bit of live market access, live market analysis. The purpose of this session is really simply to give you a little bit of an introduction, okay, into the Pinnacle Method. We're very proud of the Pinnacle Method. I know a lot of you guys on FX Street have been very loyal followers of Sam Seiden and myself, and I'd like to say thank you for that. Both he and I have been recipients in the past of FX Street Educator Awards and Article Awards, and we're very grateful for that as well. And I know you guys have a real passion for the supply and demand methodology, which, you know, gets taught in a lot of different places. However, you know, one of the things we pride ourselves on at Pinnacle is that we're the guys who created it, you know, and I always give big credit to Sam Seiden and his creation of the methodology and how important that's been for everybody. So he schooled me, he mentored me. So I hope that, you know, you're going to get a little bit with me of what you get when you're working with him as well, which I think is good for everybody. All right. So I do have eyes on the questions. Can I just get a confirmation that you guys can actually see my screens? Can I get a confirmation that you're seeing my charts right now? I actually have a chart up of the dollar index right now. Can you guys all see that? That's good. Hey, Cathay. Can you guys all see that? If you go ahead and type in your screen, otherwise I just know that I'm broadcasting and everybody's hearing me, that would be good. If everyone's just typing yes, you can see my charts right now. I'm showing you a chart of the dollar index at the moment. Is that coming through, guys? Can't see it. All right, let's try now. How's that? Come up now? Got it? Awesome. And that's why I asked, because I wouldn't have known. Thank you, guys. Appreciate that very much. All right, cool. So let's start with this. So look, I think basically what I'd like to do in this session is really strip this down to the absolute basics, because in our workshops we go a whole lot deeper because we have a little bit more time. But you know, when I look at a chart, I look at kind of two things. Okay, I look at two things. Where is it at and where can it go? Where is it at and where can it go? I'm going to go ahead and write that down right now for you. Okay. Let's go and write that down for you. Okay. So let me do this. I'm going to create a drawing set. All right. And I'm going to write on the board right here. Okay. Two questions. Question number one. I put a box here. I'm going to say two, and this is what you should always ask yourself. Question number one, where are we at? Question number two, not number three, where can we go? Now you'll find I don't like mistakes. Now to me, there it is on the chart right there. Question number one, where are we at? Oh no, look, you didn't tell me I did a typo there. There you go. That's better. All right, isn't that go? All right. Two questions you should always ask yourself. And to me, this is the embodiment of the Pinnacle methodology. These two questions. And I think if more investors, and I say investors as well, but if more investors asked these two questions, I think they'd have a lot clearer idea of everything that was going on in the market. Where are we at? Where can we go? Because here's why I think this is important. Let's look at question number 1 first. Where are we at? Okay. Think about this for just a second. All right. If you've got an idea of where you're at, this should give you an idea of, is there a trading opportunity in front of you right now? You understand? That's why question number 1 is so important. Where are we at? Because I could be somewhere where there is an opportunity, or I could be somewhere where there isn't. And how many of you in this trading room right now have found yourself in situations where you've been pretty bored looking at the market, like, the market's not very clear. I don't really know what it's doing. I don't know really where it's going to go. And then kind of just forced a trade and done a trade for the sake of doing a trade, rather than done a trade because you were genuinely waiting for an opportunity, and ended up forcing a trade, and it ended up being a pretty awful trade, and it ended up losing you money for no reason. Anybody been in the room that? Because you can't see me right now standing here in my office, but my hand is in the air. My hand is in the air, firmly raised, going, I've done that before. I've forced positions, I've forced trades because I haven't been patient enough and haven't really thought about where we're at. You guys been in that situation before, anybody? I know you're not always everyone's so talkative on this, and that's fine. But I know I've been in that situation. Maybe you're looking at the recording in that, thinking about that right now. Well, where you are right now is going to tell you if there's an opportunity in front of you. Do you understand? Where you are right now is going to tell you if there's an opportunity. Is it worth taking a trade? And then after that, question number 2, where can we go? Is if the answer to question number 1 is, yeah, we're at a place where there's a trade, then you got to ask yourself where we can go. Because then the flip side of this is, once you're in a position and it is working in your favor, what is the thing that we struggle with, a lot of us? We struggle with 2 things. We struggle with either taking profits too soon or hoping the train never stops riding in our favor. You understand, guys? And that is a huge, huge part of all of this as well. Okay? Because what people do is, again, they don't think always about, the bigger picture in all of this. They don't think about, what is really at stake, what's really going on. Okay. And that for me is like, you can get in a trade and you have a nice trade that's like a 3 to 1. And then it soon as you end up giving it all the back because you're looking for a 10 to 1. So let's use the dollar index and ask these 2 questions right now. Let's look at the chart here. Let's go full screen. And this should give us a really good idea. Okay. Now, I'm not talking about trend right now. I'm not interested in any of that. Okay. I don't really care too much about the whole trend concept at the moment. I'm not worried about that. All I'm asking myself is, where are we at? Where can we go? We could get into trend in a whole nother session. But I'm asking us where we are right now. Now, if I look at this, there's 2 key areas that we should be looking at on our chart right now. And there's the recent demand zone where we rallied from. We've had 2 demand zones. We had a demand zone here, and that didn't work. And we got a little bit of a reaction from it. You see, it came down off this red candle, gave a little bit of a reaction, and then it fell. Look, you can see the reaction. If I go down to, say, a 4-hour chart, you can see here, look, we hit that zone. We had a bit of a reaction, and then we gapped down, and then we pushed right through that into another area. I'm only working off of daily charts now. Everything I'm doing here, you can do on larger time frames too. But then we came down to the next area. And these are all genuine setups that we've been looking at in our sessions at Pinnacle. And we came down to the new zone here where we've got this rally, bit of basing, and then a good strong rally again. Now, this has been pretty important area, a very important area, big test for the market. So right now, zoom this out like this. We've got a little bit more space. Perfect. We've got this area, and then on top, what do we have? We have supply. All right, so we have our demand. Put a D there, and then we have our supply here. Lovely. All right, so based upon this information right now, let's ask question number 1. Where are we at? Well, we are right here. at the market, and we've been having this nice rally from our demand area. So here's the problem I have with trend trading, and why we don't talk a lot about trend trading all the time. Problem I have with trend trading is if you want to be a trend trader, that's all well and good, and I love being, I love going with trends. I love going with, momentum. I have no problem whatsoever doing that. The problem with the trend, though, and Sidon will tell you this as well, is the problem with the trend a lot of the time is it's too late to get in. So we could get into the market right now, and we could always use a precedent. Like, here's the thing to think about. Markets like to do what they were doing before. Like, there is an idea. Like, if you look at this chart, just look at the information that I've got right now. What has this market been doing since July? What has it been doing since July? It's not a trick question. This is more just to test that you guys are listening and you're in here and everyone's paying attention. While I have a drink, I'll let you type in what it's been doing since July. Maybe I've got one of the most unresponsive groups there. Maybe you can't hear me again. I don't know. Not really sure. Can anybody actually hear me at all? Or I've got awkward silence I have to deal with. Oh, well, in the interest of time then, yep, you can hear me. Okay, good. Well, thanks, Callie. I appreciate it. All right, very good. Well, look, since July, we've been going up. Wasn't a trick question, guys. So since July, we've been going up. Right, good. That's a trend, right? It's likely to carry on going up until something does what? Stops it from going up. Like, think about it like a car. A car's going to, as long as it's got gas in the tank, it's going to keep going until it hits a red light and hopefully stop at that particular point. Appreciate it, Cornelius and Khalid. Thank you so much. So I like to get interaction from you guys because then I know that the concepts that I'm teaching you are hopefully sinking in. It's because I know life can get very distracting. Okay. So the point is this. I'm going to make the assumption that, again, we've pulled back. We're going to go higher from this area once again. But what's the issue that I've got at the moment? Well, the issue that I've got right now is between here and here. Do I have much room for profit? No. I have a very small room and window for profit. So where we're at right now is we're already rising. We've already risen X amount. And where can we go? Not much further. Because we have a supply imbalance right here. We had a good strong drop away. We've got very little time in the area. And this market is clean to the left-hand side. What I'm not seeing is tons of trading activity going on to the left of this 114 to 114.02 to 114.77 area. So this is a decent enough area for me. Now, based on the precedent of what's been going on, I wouldn't be surprised to see this market eventually go higher. And I'll show you where I think it can go. In fact, let's go over to this chart here. Where do I think it could go? I wouldn't be too surprised to see this market go to here, to this supply zone up here, which is all the way at 118.62 to 120.51. I think the dollar's got a lot more upside left in it. But as you can see, the higher and higher it goes, the harder and harder it gets to make any money off of this thing, right? So the point is right now, it's all about timing. You know, we pride ourselves on the concept of market timing. What does that mean? The concept of market timing means that what we're doing is we're looking for when the best time to enter the market actually is. When is the best time to enter the market? Okay? So, excuse me. This to me isn't an ideal time to enter the market based off of this daily chart because the market moves already happened. And again, if I do rally to this area here, I don't have very far to go. So what does that mean? What does that lead to trading opportunities? Think about this for a second. And if you've got a pen and paper, I'd write this down. These two very simple questions should literally help you formulate any trade strategy that you want. Where are we at? Where can we go? Right now, we're already high. We're not at supply. We're not at demand, but we've already been rising. Where can we go? Well, we can go to supply right here, but we don't have a whole lot of room to go. So I've got limited profit potential. Limited profit potential between here and here. So that means if I get into a trade right now, I cannot get in off of this daily chart because there's nowhere to put my stop. There's nowhere to enter off of that. The time to enter was down here. Well, that's gone, right? So this means I have to probably go down to a smaller time frame like this and go, all right, what could I do now? Is there an entry on here? Not really. I mean, look, there is a nice little zone here. And there's a nice little zone here. But we're quite a long ways away from those at the moment, and we still have room to go to the upside. So I could wait for a pullback here and take it, but it might never do that. So I'm saying there's no real entry at the moment on this. So if I keep taking it down, let's go to a 2-hour time frame. Well, there was a nice zone here, but that's already triggered. It's already triggered off of this candle right here. So I'm running out of opportunities right now. And the point is, the closer and closer I get as this market starts trickling higher and higher and higher, then I got to start thinking, well, it makes no sense to buy up here because I'm expecting supply is going to take it all the way back down to the nearest opposing demand zone, right? So the point you got to ask yourself is, based off of this chart right now, is there any opportunity on here? Going back down to even further, I can keep trickling it down, and I could take this area of demand right here. But I tell you this right now, I've got a very limited profit potential between here, area A, and here, area B. So I'd have to be taking a first bit of profit at B, hoping that if it pulls back, it comes to B and then goes higher. But you see how much trickier it becomes, because now I'm looking at more and more and more and more zones, more and more and more zones. And that gets harder and harder and harder, guys. So sometimes, you know, depending on it, what I'm now doing is I'm trying to force a trade. What I'm now doing is I'm trying to force a position because I'm so desperate to get in this market that, guess what? I'm trying to look at it from all these different angles, and I'm losing sight of the original goal, which is, well, where am I realistically at objectively? And I'm going to take all these lines off right now. Instead of me trying to force an opportunity to jump into that market long with limited profit potential, you know what I'd rather do? I'd rather just get short here, and I'd look down and to the left for my opposing demand zone as my profit target. And that way I'm not having to worry about it. Because again, if there's selling pressure here on the dollar right now there's a good chance that there might be some residual orders left that's going to help push that down. And here's what's going to happen. If I'm wrong on that trade, what's going to happen if I'm wrong on that trade? If I'm wrong on that trade and this market ends up doing this, pushes higher, so what? Because now that supply is gone, I can just wait for the new demand area and I can take it long up to the next area. It's like playing ping pong between these areas. Do you understand, guys? So right now, based off of this analysis, there really isn't anything to do. And that is where so many people go wrong, okay? They go horribly wrong by not looking at where are we at and where can we go. So let's go look at some different markets on here for a second, okay? So let's immediately go take a look at the Euro USD. Now, I'm going to show you some levels on the Euro USD. Our most recent areas that we had. I'm actually going to go to the daily chart quickly. And as you know, there's, if you may or may not know, the euro has an inverse relationship with the dollar typically. So if you look at this, see we hit supply here. Again, I'm looking at the daily chart. But you see you hit supply here on the dollar, on the euro. The euro's fallen off of this area. Everybody see that? If you go back over to my dollar index, that was when we hit demand. So when we were hitting demand on October 4th and 5th, on the euro, we were hitting supply when? October 4th and 5th. That's what we call an inverse relationship. So this inverse relationship, it's telling me the same thing. Now, where am I at? Where can I go? Where am I at? Well, I'm not at demand. I'm not at supply. I can expect that we're going to go a little bit lower, but it's getting harder and harder for me to enter a trade, and my profit potential is what? Increasing or decreasing? My profit potential is decreasing because I'm getting closer to demand. Now, again, I want to make this very clear. I'm not saying that this level here is going to produce a massive move. What I'm saying is that's a brick wall that I don't want to sell into. Based on the precedent of price, we are in a very weak market on the euro. In fact, let me show you how weak. Look at the monthly chart. Look how rough that monthly chart is. I mean, look how rough that is. I mean, look, we've absorbed most of the demand here already on this monthly chart. We've absorbed most of it. We absorbed most of this demand on that candle there back in July. And then we failed to even get back up to supply. We never closed below this area. But we don't have any good quality demand on this market, on the euro, until 87.14. We don't have any good quality demand until we get all the way down there, and we chew through a lot of this demand here. So this market has the potential. But if you take a look again on this chart right now, where are we at? We're in demand on a monthly chart. That makes it really challenging to get a good entry on the short side, even though the precedent for this market has been major weakness. Look at how supply has been controlling. So again, I'm at the nearer the bottom of the move. This makes it challenging for me. If I didn't get into it, where was it easiest to get in? Where was it easier to get in? Right at supply. That's where we were getting in. We were getting into the market at supply last week it was. Last Monday, we were looking at this zone in our exchange sessions in Pinnacle, and that was where we were shorting, because that made good sense. We were also shorting here before that in September, right? There's only been 2 good quality entries short on this market over the last couple of months. One here early September, one here in early October. Okay, these are the 2 zones I'm talking about, here and here. Now those 2 is, you may, well, I want more trades than that. Well, you can go and find more trades on smaller time frames, guys. But if you answer the question of where are we at, where could we go, that will force you to wait for the very best opportunities, because by doing that, short from 102, awesome. Short from 1, great. We've had a lot of good position potential on that. Now, sure, everyone wants to day trade because it's glamorous and it's great. I'll tell you this, day trading's really hard. If you like day trading, I've just been doing a session of day trading before this session. It's called the Open Exchange, which I run every Tuesday and every Thursday, 9:15 to 10 every Tuesday and Thursday morning, where we day trade. And today, there have been no day trades for us. None. We haven't had any yet. We're still waiting for trades. A couple of days ago, we had some awesome trades right in the open. So it's all about patience, but our profit potential is also more limited. These concepts I'm talking to you about here are more on swing trades. However, we could go down to smaller time frames as well if we wanted to and find that. So let's do that. If I want a short-term trade, where are we at? Well, right now, I'm not at demand. I'm not at supply. I'm in a weak phase of the market, so I could keep selling, but I can't sell off this daily chart. So what have I got to do? Go smaller. Let's go to the 4-hour chart. Now, if you look at the 4-hour chart, the most recent entry we had on the 4-hour chart was actually up here. Okay, again, that was a 4-hour zone. Actually, it was a 2-hour zone. Let me show you. There it is. This is our most recent entry that we had. All these levels I'm showing you, by the way, on my chart are all zones, are all levels that we have covered in our exchange sessions. So these are all trades, ideas. This is our short from last Thursday. Okay. We've been waiting for a new shorting opportunity. Now, notice what's happening, though. Look, there was a little bit of supply right here on this 2-hour chart, right? But look what the problem it's got right now. It's very close to this demand zone here. Now, this demand zone here isn't great, but look what's happening as we get to this area. You see what's happening here? The market is trying to deal with the supply and demand imbalances right now. Now, we have a better demand area here, and we have a better one here, but we're in a state of fair value right now. And fair value means that the market's equalized. It's kind of equilibrium at the moment. Now, we can anticipate that we probably could get lower prices based on what the market's been doing. But right now, we're in a state of equilibrium. And the key areas that are untested are down here and higher, right? So while we're in this state of equilibrium, we call this fair value. If you want to know more about fair value, come to the workshop. Talk all about that with you. Let me remove these drawings right now, right? But here's what's going on. Here's like fair value right now. We've got this whippy trading where most people are getting chopped to pieces. So where are we at? We're not at major demand, but we're in a sign of fair value. So I'm not really interested in doing anything on this market right now, if I'm going to be conservative, until we push a little bit higher to look for a short there, or unless we come a little bit lower to look for a long down here. You understand? And I'm going to do this. I'm going to move that zone all the way down like that, and I want to avoid the mess in the middle, and I want to catch the price when it's extremes, because then if I get to this 97.91, I'm going to be at supply. Where am I at? Supply. Where can it go? Down to demand. If the price comes down to this area here, ask the question, where am I at? I'm at demand. Where can it go? Back to supply. Then I am outside of fair value. This whole area here, we call this fair value. I'm going to put FV. So too many people are getting chopped around in the middle because they're trading in the fair value zones. And you can see these opportunities. Once the market breaks out of fair value, then it's off to the races. We had a fair value pattern here. We had a fair value pattern here. We had a fair value pattern here. Right now, we're in fair value. Okay. So I get it. I look at the market and you're like, well, I want to go lower. I want to go lower. I want to get short. I want to go with the precedent. There's not an entry right now. The entry was up here. It might be a little pocket of supply up here that you've been leaning on, great, but you're a very frustrated trader right now. Wait, so if you're not in that trade, I'm not going to take it anymore. That trade has missed the entry. If you're in a trade off of the supply zone right there, great. The better thing is to wait for it to get to this higher area, because then the string will be stretched a little bit more, the spring, and then there's a higher probability that it will return back to this fair value point here, and maybe because of the precedent of the larger time frames, go a little bit lower as well. Make sense? So again, a lot of patience involved in this. Now, so well, I could go down to a 5-minute chart. All right, let's go to a 5-minute chart. What does that tell me? Well, you're going to see the same concept. You're going to see exactly the same concept, right? It's just going to have a whole load more zones, right? There's a whole load more zones, like demand work right here. Look, demand's great here. Supply and demand has been moving on both sides all the way. But guess what the problem you've got right now? There is no untested good quality supply or demand. And if you work off this 5-minute chart, the challenge you've got of working off this 5-minute chart is there's no clear zones on here. And all the market is doing is chopping between these areas. Look how messy that looks. Why make it messy? Why make it unclean? You can take it to a 15-minute chart, but you're going to see the same thing. Look at all this fair value that's going on right now. There's no good quality demand here. This demand zone is not a quality demand zone. It's not in a good location. It's in the middle of fair value. This demand area is not a demand area. This is just a pivot low. Hey, Abdul. So the problem you've got is the smaller the time frames you get, the less clear, or the amount of, you lose a lot of clarity on the market. Whereas when I go to this chart here, a whole lot cleaner. But people seem to have this obsession with sitting in front of charts all day, wanting to like find stuff, find trades and all that. And guess what? That's not what really trading is. You know, most of in the work that I do outside of teaching, most of the trading systems that we run, 95% of the trade, 98% of the system are now all fully automated based on the strategies that we've created, you know, because that way it takes the human emotion out, and that way I don't have to sit there and wait. The system will find it for us. Okay. So what you want to try and do is you want to start building a mechanical system outside of this, and it's okay to execute that yourself, right? But the thing is, have you got the patience to? Do you understand? Have you got the patience to? That's where a lot of people typically go wrong when looking at these markets. Okay. So again, let's do another example before we head out. And I haven't looked at the Australian dollar for, but let's look at a cross pair. CAD yen. Canadian dollar, Japanese yen. Like, these are some lovely areas that we had on here. And I want to just show you some of these zones that we've had. And let's take a look at this Canadian dollar, Japanese yen. I've not looked at this chart for ages and ages. So these are the zones. What we've got. This is a daily chart, right? I think up here. Yeah, this is a daily chart. Let's see. Cool. These are our previous buy areas. So we can go ahead and remove all of these now because these are done. So let me just clear these buy zones off. Wonderful. And let's take a look at what we're doing on the Canadian yen. All right. Now, if you look at the Canadian yen, and there might not be anything on here. I actually think on this, I only really need to look at where we can just do this on a daily chart. Think about the two questions. Below the zones, same as I would on a 5-minute chart. Above or below. Like if there's a zone here, doesn't matter what chart it is, same thing, Abdul. Below the zones, okay? Or above the zones, below or above. Same process, my friend. They're just going to be larger, the stop losses. Do you understand? That's all that's going to happen is it's going to be larger, but it's all going to be relative. So whether this was a daily area or a weekly area, if I've got my entry here, my stop's going to go below. Okay, buddy? Let's look at what we got going on. Do we see that we're moving right now? Are we at supply or are we at demand? I mean, look, here's the thing. That's why I don't like trend, right? Take a look at this. We were making higher highs, higher lows, higher highs, higher lows, higher lows, higher highs, equal lows, higher highs. Now we're making lower lows, lower highs. So now are we starting to trend down after an uptrend? Maybe, maybe not. Who cares? I'm not worried about that right now. All I want to know is there a profit between my zones? Is there a real profit available between my areas, right? And when I look at this right now, where am I at? I'm not at supply. I'm not at demand. I'm in the middle. And what am I seeing? choppy trading for the last however many days. What's this range of time here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. 13 days of chop. 13 days of choppiness. 13 choppy days. See that? 13 choppy days. Now, of those 13 choppy days that I've got on here, right? Why do I want to get involved in that? Hey, Hassan, I don't want to get involved in that. I want to look up or down away from this and get to a place where I'm at supply with profit target potential or at demand with profit potential. You understand? And so what that's going to do is that's going to change me, because I'm going to look up and I'm going to see here, there's a nice little pocket of supply at 108.44 to 109.14, well away where the market could never get itself back to. And down here, I'm going to look and see that there was a monstrous move away from here as well, with a huge rally in price, well away from this too. Now, I got to wait for it to get higher. I got to wait for it to get lower. But that's the way it is. Now, in the meantime, we might find something else. New zones may be created, but that's the situation now based off of this daily chart. You understand? That's it based off of the daily chart. For us, typical swing trader, we're going out further. Where am I at? Where could we go? Now, can we take this down to a smaller time frame and do the same analysis on a smaller time? We can say, well, I really want a day trade. Well, we can still do that, but we still have to look at what the chart is giving us. If this was a 5-minute chart and not a daily chart, I'd be looking at the same thing. 5-minute levels makes no difference. Same process, right? Now, I haven't covered multiple time frame analysis in any great depth just because of in the interest of time. You know, there's a lot we can only cover in 45 minutes, 40 minutes. But again, these are general concepts that you need to start asking yourself. And when you start asking these concepts, and discussing these concepts and thinking about these in a little bit more depth, they start to make things click. So let's look at something else that's maybe a little bit more volatile. GBP New Zealand, right? I haven't looked at this market for quite some time, right? Typical. Let's go look at a 4-hour chart. Now, to me, already on here, I can see we're in fair value. I can already see we're in fair value. Go to a 4-hour chart. Yeah, this chart's not great because of this horrible wick. I can already look at this market and go, yeah, this isn't looking too great. This isn't too great. 4-hour chart. Let's go look at it on a 1-hour time frame and see what we've got. All right, 1-hour chart. Let's take a look. So what are we doing? All I need to do is take my selection of data and take a look at this chart right now. Now on here, I cannot see any quality supply anywhere on this chart. We've got an okay area of demand on here. But right now, there's not really anything of quality on this chart because I want to play outside of this range. So this is what I'm going to do. I'm going to make a line up on these highs, extend it to the left. And I'm looking for a short-term trade. Now, $2, big number. Let's go back and see if there's anything around this area of interest to us. Now, look, I'm scrolling back. Going to see if there's anything on here. And here we go. Perfect, right? So this is where the market is currently. Now, what I look and see is like, wow, look, there's a really good move away from here, but the price spent a bit of time in here. Here, I've got a very nice area. Well, we've got a good strong drop away. Nice, clean left-right zone structure above the zone, not below the zone, which indicates to me that there's new imbalances in that area. So that's pretty nice. So I'm going to remove that, and then I'm going to scroll all the way back to the start of the chart and see if that's been tested yet. No. And it's outside of this current ugly range, okay? Now, do I go back into the left and look for the same kind of pattern? And I can see on here, look, awesome. We've got some action right here. Okay, that's pretty solid off of there as well, with a good move below and outside of this particular range, okay? So now, okay, looking a whole lot better for me on this range. So again, now I'm on a 1-hour chart. I'm not going to have to wait as long. But now I know where I'm at. Not at supply, not at demand, but I know I got decent profit potential in between. That's exactly what I'm looking for. Now I could even go one lower on this. So look, I'm not going to have to wait as long for these trades. If I now go to say like a 15-minute chart, okay, let's see where we're at on the 15-minute chart. Now look what the difference is. If I zoom in on here and let's take a snapshot of this market like that. I'm going to have to wait a whole lot more. I'm going to have to really look and really see what I've got. And at the moment, there's nothing. There was a zone here that has been tested. There's a zone here that's been tested across here. There's not really anything on this chart on a 15-minute until we get down to there. Now, here's the thing you got to understand about a 15-minute chart, guys. Your stops are going to be smaller, but your targets are going to be smaller too. You understand? So look, I've got a 15-minute area and I've got a 1 hour area. So as a 15-minute trader, great. I've got a nice little zone of demand, but then I've got to be a lot smarter with my profit taking. Do you understand? Because I've got to look at this whole fair value pattern and my profit target is limited. If I go to the larger zone, I've got less chance of getting a quick stop out and I've got a bigger profit potential. Do you understand? So all I'm doing is just scaling this, looking for the best opportunities I can find based upon these particular time frames. I've got a nice little zone right up here as well on the 15-minute chart. Now look what happens as I go to smaller time frames. I just end up finding more and more opportunities. Okay. What happens is I just end up finding more opportunities. Is that a good thing or a bad thing? Yeah. You know, I'm not a huge fan of over trading. You know, I'm really not. These are the areas that I've got in play right now off of here. So look, on a 15-minute chart, I'm going to wait for 96.33 or I'm going to wait for 2001. But again, my profit potential is going to be limited because I'm closer to this inside range. All right. Going to get closer and closer to this inside range. So it's a process. You can just keep taking it down. I mean, heck, you could even go down to a 2-minute chart and do it. I do not recommend that. But look how price broke out of this range, hit into supply, is broken down. It's probably going to go down to this area here because here's fair value now. Here's fair value, right? Where am I at? Well, I'm not at supply. I'm not at demand. I have room to go down to fair value, okay, which is where it's going to probably go, which is why I've got short rallies back down to these areas. But I would never suggest you trading off of a 2-minute chart in Forex, because unless you really know your zones, you're going to end up just getting chopped to pieces constantly on these markets, okay? So for this stage, I'm going to tell you, start practicing on larger time frames like we were just doing. Start practicing on bigger charts. Like I would say the lowest time frame you should really be going down to at this point in this, if you're new to this, is about a 4-hour time frame. It's about as low as you really need to go. You don't need to go much lower than that, especially if you're going at Forex. Now, if you're going over to the futures and things like that, that's a very different story. You know, if you're trading on the futures markets, when you're looking at these kind of trades on here, this is different. We have much bigger smaller time frames. This is actually a trade that we took today. So this is a trade that we got today. Okay, here's our zone right here. And then this is the lowest trade. This is one of our setups long today that we had on the S&P. It was long right here at 37.80. Okay. Yeah, difficult traded daily chart and also a 15 fire. It is. So you have to try something like Hassan. I would highly recommend never going lower than a 4-hour chart really on a pound New Zealand, because it's so volatile. It would get really hard. Or you're trading the wrong thing. You know, this is a day trade setup that we had today. Literally 9:15 this morning, I started the session. And this is the S&P futures. And this was our long trade. This was our zone. 3579 to 3571. We've already hit, halfway target, and then we're looking for a short up at there. So, there's opportunities on these markets all the time. This was a short that we had here that only did a halfway push, and then we had nothing on. I don't think we had anything on the NQ yet. Let me take a look. Yeah, nothing on the NASDAQ yet. So the only, the long trade that we got today was this, but this is a much better market for it because the zones are generally a lot cleaner on the stock indexes. Here's the zone here. You can see it. You see the zone right here, which has just triggered our trade. Bang, giving us a lovely little move off of there, and it's halfway. So it might also be something as simple that you guys, need to be looking at a different market maybe. Okay, but again, those two questions. Let's go back to it. Go back to those two questions that we looked at. Okay, and I want you to take, if there's anything you can take away from today's session on here, These are the two questions that we should be asking ourselves. Okay. Here they are. And I'll leave it on the full screen. Go to the daily charts. There it is. Where are we at? And where can we go? You focus on those two questions, guys, you're going to be a lot happier on your trading. But I completely agree with you. Completely agree with you on that. Pound New Zealand is not an easy market in that respect as well. I know I was going to do a session with you last week and we had some major technical difficulties. So I wanted to apologize for that. And I want to say thank you to everybody at this live session for coming today to our session to listen to this. This is what I was hoping to do with you last week. A little bit of live market analysis, but also with some lessons in there too. I hope you found that useful. It's amazing how quickly 45 minutes goes. Guys, I'll just share this with you again. If you do have the opportunity and you like what you heard and you want to spend a little bit more time looking at it, I'm going to suggest you get to our workshop tomorrow. You can go to pinnacleinstitute.com. Here is the link below. Okay, and you can check that out and then go register for our workshop with Sam Seiden himself, the guy who mentored me, and give you a great little idea of a little bit more detail about what that was. Okay, thank you, Jamie. I appreciate that. And find out a little bit more. It's a free workshop, so go check it out. We also have another session on Saturday and another one on Wednesday of next week. Typically run those, so take a look at those. Drop me a line. The man will be there, and I hope that that was used to you. All right, guys. FX Street, thank you as always for having me. Really appreciate it. I'll see you guys next month for another session. Okay? Have a great rest of your day. Thanks, guys.